A dividend king is what? A stock with a dividend rise streak of at least 50 years. The dividend kings are profitable businesses. They have endured times of high inflation, stock market collapses, international crises, and protracted recessions. Their dividends have endured 7 recessions: the Great Recession, the Vietnam War, the Gulf War, the fall of the Berlin Wall and the Soviet Union, 9/11 in 2001, the dot-com bust, and COVID-19 all over the past 50 years. Here are the top 8 dividend kings. Number 8. Kimberly-Clark. An international manufacturer of consumer goods, Kimberly-Clark sells disposable products like tissues, paper towels, and diapers in 175 different nations. It operates through 2 divisions, personal care and consumer tissue, which together house many well-known brands and bring in close to $20 billion in annual revenue. On July 26, 2022, Kimberly-Clark issued second quarter financial results. Both top and bottom line results exceeded expectations. The adjusted earnings per share came in at $1.34, beating expectations by 3 cents. Revenue rose 7% year over year to $5.1 billion, which is $110 million better than expected. Total revenue was up 7%, as Forex reduced sales by 2%. Organic sales climbed by 9% as a result of higher net selling prices, a 9% increase in the product mix, and volume declines of 1%. Organic sales in North America increased 8% in KC Professional and 11% in consumer goods. Number 7. AbbVie Inc. In 2013, Abbott Laboratories split out a pharmaceutical firm called AbbVie Inc. Humira. The company's most significant medication is currently up against biosimilar competition in Europe, which has had a substantial effect on the business. In the US, Humira's patent will expire in 2023. Despite this, AbbVie continues to dominate the healthcare industry, offering a wide range of products. On July 29th, AbbVie issued the financial results for the second quarter. The firm was able to earn $14.6 billion in revenue during the quarter, which was 4% more than what AbbVie was able to do at the same time last year. AbbVie is marginally below analyst consensus in terms of revenue generation, missing the top-line consensus by $60 million. While the benefit of the allergen purchase has now been fully lapped, which is why it no longer had a one-time impact on sales growth, unlike in previous quarters, AbbVie's revenues were positively boosted by attractive growth from several of its newer products, including Skyrizi and Rinvoq. In the second quarter, AbbVie generated $3.37 in earnings per share, an increase of 11% over the quarter of the year prior. AbbVie's earnings per share were 6 cents more than the average analyst estimate. Since our last update, AbbVie's projection for adjusted earnings per share in 2022 has been somewhat cut. The company now anticipates making between $13.78 and $13.98 per share this year. Number 6. Northwest Natural Holding Co. Since its founding in 1859, NW Natural has served more than 760,000 consumers, up from a small number at first. The utility's goal is to provide natural gas to its consumers in the Pacific Northwest. And because it has succeeded in this endeavor, it has been able to increase its dividend for 66 years running. On August 4th, NW Natural issued second quarter results. In comparison to the same quarter last year, the company's net income increased to 5 cents from a net loss of 2 cents. $194.96 million in revenue was a 30.9% year-over-year gain. Over the previous 12 months, NW Natural added 10,200 new natural gas meters, or a 1.3% growth rate. In the meantime, management reiterated its forecast for 2022, with profits per share projected to be in the $2.45 to $2.65 range, and a long-term growth rate of 4 to 6%. Number 5. Federal Realty Investment Trust. In 1962, Federal Realty was established. Owning and leasing out real estate properties is the core of Federal Realty's business plan as a real estate investment trust. It buys new properties using a sizable amount of its rental income as well as outside funding. As a result, there is a snowball effect whereby income increases over time. The main assets of Federal Realty are shopping malls. However, it also engages in the redevelopment of buildings with multiple uses, such as condominiums, apartments, and retail. The tenant base of the portfolio is very diverse. FFO per share increased to $1.65 from $1.41 in the same quarter last year. Comparatively, total income rose 14% to $264.1 million. The amount of net income made available to common shareholders increased from 57 cents to 75 cents. With 132 signed leases for 562,111 square feet of similar space during the quarter, Federal Realty continued record levels of leasing. During the quarter, the trust portfolio was 94.1% leased and 92% occupied, increasing by 140 and 240 basis points, respectively, year over year. Nevertheless, the trust kept a 210 basis point gap between occupied and rented properties. Additionally, the small shop lease rate increased by 360 basis points year over year to 89.3%. In addition to this, Federal Realty reported an 8.2% increase in second quarter comparable property operating income. The business also increased its outlook for 2022 earnings per share to $2.50 to $2.65, from $2.36 to $2.56, and for FFO per diluted share to $6.10 to $6.25, from $5.85 to $6.05. Additionally, the company anticipates comparable property income growth to be between 5.5% and 7%. Number 4. Canadian Utilities. With an annual revenue of $8.07 billion and 5,000 staff members, Canadian Utilities is a global energy infrastructure company based in Alberta and is 53% owned by ATCO. Canadian Utilities offers services in electricity, pipelines and liquids, and retail energy. The corporation takes pride in having a 50-year history of consecutive dividend increases, which is the longest in Canada. The currency used in this research paper is the US dollar unless otherwise stated. Canadian Utilities issued their second quarter 2022 results for the period ending June 30, 2022 on July 28, 2022. The quarter's revenues totaled $726 million, an 18.1% increase over the same period last year. EPS for the quarter was 39 cents as opposed to a loss of 3 cents in second quarter 2022. The COVID-19 worldwide pandemic-related rate relief offered to clients in 2021 and the following decision to optimize the recovery of deferred revenues from 2021 to 2022 were the key causes of higher revenues. Canadian Utilities can expand its revenue gradually but steadily by profiting from a reliable business plan. The business continuously makes new project investments and gains from base rate hikes, which increase by about 3 to 4% annually. The Alberta Utilities Commission received a request from management last year to delay rate increases for the distribution of electricity and natural gas by Canadian Utilities. The deferred revenues are anticipated to be received by the corporation in early 2022. We continue to forecast 4% growth. Number 3. Leggett & Platt. It is a producer of engineered goods, die castings, industrial goods, store fixtures, furniture, and bedding components are all among the company's offerings. With 14 business units, Leggett & Platt employs more than 20,000 people. Due to its 50 years of uninterrupted dividend growth, the company is eligible for the Dividend Aristocrats and Dividend Kings list. Revenue of $1.33 billion in the second quarter of 2022 increased 4.7% year over year. The 70-cent earnings per share surpassed projections by 1 penny. The company revised its full-year forecast, now anticipating 2022 revenues of between $5.2 billion and $5.4 billion, and earnings per share between $2.65 and $2.80. Number 2. 3M Company. More than 60,000 of the items sold by 3M, an industrial producer, are used daily in homes, hospitals, corporate buildings, and schools all around the world. More than 200 nations are served by its approximately 95,000 personnel. The business issued second quarter financial results on July 26th. The revenue for the quarter decreased by 3% to $8.7 billion. Adjusted EPS decreased by 10% from quarter 2 2021 to quarter 2 2022, from $2.75 to $2.48 per share. The business also disclosed its quarterly earnings and a separate announcement on the spin-off of its healthcare division. Given that the healthcare industry as a whole has yearly sales of more than $8 billion, this is a significant announcement. The $26.8 billion in revenue-generating sectors will make up the new 3M, while the healthcare spin-off will continue to sell the $8.6 billion in the revenue-producing product portfolio. Number 1. Universal Corporation. An investment in tobacco is Universal Corporation. It is the biggest exporter and importer of leaf tobacco in the world. The business serves as a middleman between tobacco farms and the businesses that make cigarettes, pipe tobacco, and cigars by purchasing and processing tobacco wholesale. In addition to its primary leaf segment, Universal also has an additives business. Revenue increased by 23% year over year in the most recent quarter, while the cost of products increased by 22%. As a result, adjusted operating income increased 5% to $13.3 million, while gross margins increased by 70 basis points to 18.5% of revenue. Revenue from ingredients increased 46% year over year, mostly as a result of the business's 2021 acquisition of Shank's Extracts. We do not anticipate the company to continue delivering great growth in the future as the market leader in a dwindling sector. However, the company's earnings per share may increase during the following several years. Based on the earnings and cash flows that the company produces, Universal shares are valued moderately. Additionally, Universal does not need to make significant investments in its business, allowing it to use a sizable portion of its free cash flows for share repurchases and dividends. What did you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.